Welcome back to Real Estate 101. I'm your host, Joe Tercera. And today we're going to continue our discussion on mortgage financing. We're going to talk a little bit about second mortgages. And I'm pleased to be joined once again by Eva Zaba of Centum Way to Save. Eva, welcome back to the show.
Thank you for having me, Joe.
So Eva, I want to start today's show and talk about second mortgages. What is a second mortgage?
Well, if the client have a property, they own the property, and they do have a mortgage, they can have first mortgage, second mortgage, third mortgage on the property. Basically, if there's a problem with the repayment of those mortgages, bank can take away the property from the client and sell it.
Right.
And first mortgage will be paid off first.
Right.
After the sale of the property, and the second will be in second position to be paid off by the lender at this time.
Okay, so when do homeowners normally get a second mortgage, or why would they get a second mortgage?
Well, the homeowners will take a second mortgage if they had a little trouble with the credit card, or they have just sometimes life happens and
Right.
they lose the job, they get sick or something like that, and they are back up with the payments on the credit card most of the time, or the car loans. So we consolidate those high interest loans into the much smaller interest loan, and we register that as a as a second mortgage, as a secure loan.
Okay, now is a line of credit a second mortgage?
You see, most of the clients don't even know the line of credit, it is a second mortgage. The banks will give a client, they can obtain a line of credit unsecured, but most of the time the clients do have the secure line of credit.
Against their home?
Against the home. And you see, the situation is then clients don't even know that they have a line of credit, but they don't think that this is a second mortgage. So when the time comes to, when the mortgage is up to turn, and they would like to switch the lender, because they have a second mortgage as a line of credit, they are unable to do the switch of the lenders. And switch of the lenders, that's almost no cost for the client. So they at that moment they will have to refinance to switch the lenders, even if they have a zero balance on the line of credit.
So can homeowners obtain a line of credit as a first mortgage?
Absolutely. If the homeowner doesn't have a mortgage, they can obtain line of credit, and that mortgage would become a first mortgage. Or sometimes a contractor would like to purchase a property and resell it in a short time. Then they can have a line of credit as a first mortgage, but the down payment on it is much higher than on a regular mortgage.
So are you normally finding homeowners are only getting a second mortgage when they're having credit card issues, or are there other reasons they're getting a second mortgage?
Well, they're getting a second mortgage most of the time because the first mortgage is not up to renew, and they will have to pay big penalties to the bank or the first mortgage holder for breaking that term with the bank. So instead of breaking that first mortgage, we'll consolidate everything to the second mortgage, and this way we save a bunch of money to the clients.
So how and where can homeowners obtain a second mortgage?
Well, we can apply. It all depends on the situation of the clients. So we can apply to the bank. We can apply to the lending institution, or we can go and take private funds.
Okay, and is the qualification required different for a second mortgage than a first mortgage?
Well, if we have excellent clients who just need to pay off some credit cards, we can go to the bank. But the qualification would be the same. We just got to add the first mortgage and the second mortgage for the qualification. But if we will go to the private lenders, then the qualification it's much easier sometimes to qualify people for that kind of loans.
So let's say homeowners have some equity in their home, but don't have the greatest credit history. Can they still get a second mortgage?
Absolutely. Absolutely. You know, life happens. So sometimes they are late with the payments. Sometimes they miss few payments, and that would be okay with the private funds. Maybe not. We cannot send them to the bank, but we can send them for the private funds.
So for today's final question, is the second mortgage based on the loan-to-value ratio on the property?
Usually, yes. Usually we go by the loan-to-value. So we can pull up the equity, then it's locked in a property. But also it depends where the property is located. And you gotta understand if the clients got better credit, then we can usually get more money out of the equity.
All right, Eva, thanks very much for coming on today's show.
Thank you for having me, Joe.
If anybody has any more questions or would like more information on second mortgages, they can get in contact with Eva Zaba at Centum Way to Save. I'm your host, Joe Tercera. Thanks for watching, and we'll see you next time.